Good afternoon, traders and investors. Will back here with another one, coming to you with a Thursday market recap. Hope everybody had a beautiful day. And in today's markets, guys, well, we had a little bit of a green open in the morning and gains were decent across the board, but towards the midpoint of the day, those gains simply evaporated and our daily downtrend consolidation simply continues at this point, guys. Now, there was no key news events that happened during the day to reverse the gains. No economic data, no jobs data, no inflation data either. However, we just continue down this path of uncertainty and the markets are definitely a little bit timid, guys, right? So in today's video, we're going to take a look at a few key elements that did happen today, namely in the form of earnings. Number one, we had a very big report come out this morning from TSMC, the largest semiconductor manufacturer in the world. So we'll take a look in today's video at their earnings. And we're also going to cover Netflix earnings, our first big tech name to report. Most of the rest of your big tech names will be reporting next week. So we are going to take a look at those two company earnings very shortly. After that, we're going to do our classic technical analysis rundown in terms of big tech and also our major stock market indexes to see if there is potentially a bounce coming on the table soon. Now, obviously, guys, before we get into that, I just want to take a quick note here. We obviously know now why the markets have been dropping, right? It's geopolitical uncertainty and inflation uncertainty as well. So in my opinion, there still remains no immediate urgency to start buying dips aggressively. We can start to do a little bit of nibbles on your favorite companies, but until we get some more positive data that inflation is reversing the course of the current uptrend it's been on in the last 3 months, these markets, in my opinion, will continue to remain shaky. That is why I don't believe there's an immediate urgency to start buying dips now, because we are data dependent at this point and the market is as well. So we're really not going to get much of a massive turnaround and a return to overall bullish sentiment until we get more favorable data that will support that. So with that being said, guys, let's get right into today's video. SPY down about 0.21%, QQ down 0.57%. However, they were green on the morning. So unfortunately, we did see them reverse into the lost territory. The only positive index on the day out of our major players was XLF Financial. So let's take a look at the heat map here, guys, and you'll see it was a very, very mixed market once again. A lot of your big tech names sliding, right? Microsoft, Apple, Amazon, and a few of your major semiconductor names sliding as well. But all in all, very mixed market. Only NVIDIA and AMD holding up somewhat of gains in your semiconductors. Google and Meta were obviously a bright point in the market. But take a look at healthcare. Healthcare, very, very mixed as a whole. And your banking sector as well. We did have a little bit of a relief rally in some of your major banks, but the credit card issuers sliding once again. MasterCard and Visa, after hitting their all-time highs pretty much recently, you can see MasterCard has been down now pretty much 4 weeks in a row, which is very a rare circumstance for them. Usually you would see them catch a bid by now, and even Visa has been down now for pretty much the last 4 or 5 weeks in the row, just unable to catch any much of a bid amidst this market uncertainty. So before we get further into more technical analysis here, guys, right, let's take a quick look at our earnings previews right here. And we're going to start it off with our big one, which is going to be Netflix. So let's take a look at exactly what Netflix reported. And all in all, guys, they had a very beautiful quarter, to say the least. However, the stock was down in the after hours now. We are down about, at this point in time, right, roughly about 5%. The expected move was 8% in either direction, up or down. The stock, unfortunately, moving down. However, it wasn't because their financial metrics were bad. They actually had a record quarter and a number of different financial metrics, right? So take a look at the highlights right here. You'll see that Q1 earnings, record revenue. Take a look at the revenue here, guys. They beat on revenue by about 1.37%. It was their best quarter ever, pretty much, in the term of revenue. In terms of EPS, look at this substantial beat on EPS, guys. 17% beat on EPS. So that gave us record revenue, record net profit margins as well, 25%, the best quarter in the company's history. And we also have a record subscriber count. Now, why did the stock drop in after hours? Well, it's because they're starting to change the reporting standards. Netflix will now no longer provide subscription number information starting in 2025. I wrote 2024 here. My bad for that, guys. Let me change it right away in case you're watching this after and we come back to it. So no more subscription guidance from the company starting 2025. Now, why would the company do this? Well, Wall Street analysts are maybe expecting that it could be potentially due to a subscription growth slow down, right? So Netflix has benefited from tremendous subscriber growth over the past 1.5 years at this point. And they may be expected to slow down that number as a whole. And the slowdown in subscriber numbers, well, that is going to generate, obviously, potentially less subscriber growth, and then in turn, less revenue growth perhaps. Now, the company is exploring other avenues to generate more revenue, such as their advertising subscription tiers, but still a little bit timid, guys. But with all of these record numbers, this one tiny little piece of information right here was enough to bring the stock down 5% in the after hours. Just goes to show you guys, this earnings season is going to be pretty much a very timid earnings season. We're measuring up against very tough comparables from 2023. And all of these companies have run up significantly since the start of the year. If their earnings, guys, this entire earnings cycle, if company earnings are anything other than completely outstanding, blown out of the water numbers type of things, I do believe that there will be a heavy penchant to the sell side, unfortunately. And this has been a common theme. We saw it first in the banks last week when the banks all reported very, very decent earnings, could not hold up gains, and were even getting sold as soon as the open, right? And now we're starting to see that come into effect with Netflix as well. And TSMC, the one we're going to get into afterwards, is exactly the same thing. They reported extremely good numbers, guys, but the stock was down 5%, right? So just keep an eye on that for our earnings quarter moving forward. Let's get into the article right away, right? So Netflix blows past earnings estimates as subscribers jump 16%. That was fantastic. The company said subscribers jumped 16% from the year earlier period, but added it would no longer report paid memberships starting next year. That was the only negative item of this entire earnings report. So Netflix will no longer provide quarterly membership or average revenue per user starting next year. However, total memberships rose 16%, as we just saw, reaching almost 270 million, well above the expectation that Wall Street had of 264 million. So not only did they beat on revenue, they beat on EPS, they beat on net margins, they beat on subscriber expectations, but the stock is still down 5% because they'll no longer be reporting those numbers in 2025, which is still a long ways away. As we've noted in previous letters, we're focused on revenue and operating margin as our primary financial metrics, and engagement, i.e. time spent, as our best proxy for customer satisfaction. So the emphasis on the company moving forward will no longer be how quickly can it grow its subscriber count. They're now trying to focus on how quickly can they grow net profits. A very good focus for the company indeed. Now, in our early days, when we had little revenue or profit, membership growth was a strong indicator of our future potential. That is the comments from the CEO. Netflix said now that it has generated substantial profit and free cash flow. It was a record quarter of free cash flow for them, as well as developing new revenue streams like advertising and a password sharing crackdown. Its membership numbers are not the only factor in the company's growth. It said that the metric lost significance after it started to offer multiple price points for memberships. Maybe that's the reason that they're no longer going to start reporting membership growth, just because they have different tiers of memberships at this point, right? The company said it would still announce major subscriber milestones as we cross them. Think of maybe 300 million subscribers, 350 million subscribers, right? Now sitting at about 270 million. Netflix also noted that it expects paid net additions to be lower in the second quarter compared to the first quarter due to typical seasonality. That's no secret there, guys. Q2 for Netflix has always been a historically slightly weak quarter. However, the guidance is fairly decent. They're not going to drop off a cliff that much. Its second quarter revenue forecast of $9.5 billion was just shy of Wall Street's estimate of $9.54 billion. So very, very small miss on the Q2 guidance. Now, the streaming company is navigating its transformation from targeting subscriber growth to focusing on profit, as it uses price hikes, a crackdown on password sharing, as they've been doing for the past 2 years, and an ad-supported tier to boost revenue. The ad-supported tier, guys, very, very simple. Netflix obviously has a few membership tiers. Their regular subscription starts at about $15, $16, and that's for no ads. But if you want to pay cheaper, there is a tier for you. It's about $5 or $6 depending on your location, and it's kind of like cable TV. They kind of throw in ads every now and then for your lower membership fee. Well, you are going to have to watch some ads. So a lot of people have been very interested in joining that tier of subscription model for Netflix, and it's been a very well-performing tier year for them as a whole. Now let's take a look at some of their numbers here, guys, and you'll see their numbers were so fantastic, which is why I'm so surprised that the stock is down. It just goes to show you guys the overall market conditions now are just not favorable for anybody unless they're reporting substantial earnings beats. This company beat on every single metric, but Wall Street chose to focus on the one thing, the one little negative item in the report, and just drop the stock 5%, right? So here's the summary. We're off to a good start in 2024. Compared to Q1 of 2023, our revenue was up 15%. Our operating income grew by 54%, and our operating margin rose by 7 percentage points to 28%. Guys, these are some of the best numbers that Netflix has ever delivered. For fiscal year 2024, we forecast revenue growth of 13 to 15%. We're raising our fiscal year 24 operating margin forecast to 25%. Extremely good, up from 24%. So a little bit of a 1% bump on operating margin. That's very good. Take a look. The operating margin is right down here, right? So take a look at this operating margin right here. You can see that it is one of their best quarters ever, especially in the last year, usually in the low 20 percentage points. Now Q1 2024, look at this, 28.1%. And the Q2 forecast is also high, mid to high 20 percentage points, right? 26.6%. That is a net improvement over the course of the last year. Love to see it. In terms of their membership growth, very healthy membership growth, one of their very best quarters. You'd have to go back to the early days of Netflix when it was a growing platform to find numbers like this. For it to be a mature platform and still growing subscriber count year over year of 16%, that is fantastic. But because they're no longer reporting numbers next year, are they potentially forecasting a slowdown? Well, we will definitely see. But even if they do get a revenue slowdown, guys, or a subscriber growth slowdown, they are going to be focusing on improving net margins and improving free cash flow. So as an investor, you should be very happy about that. Now let's take a look further down into their numbers. You can see why are they pivoting from subscriber numbers to engagement. If you don't know what engagement means, how many views do they get for their shows? So expect to see a lot more metrics such as these right here, right? Prestige dramas with Griselda. You see here, they put the views, 66.4 million views. That is going to be their going forward metric as to how users are appreciating their platform. So this is going to be the new standard for Netflix starting in 2025. Now, a few highlights from the company as well before we get into their direct numbers. Almost 270 million households across 190 plus countries now subscribe to Netflix. With more than 2 people per household on average, we have an audience of over 500 million people. Listen to this next line. No entertainment company has ever programmed at this scale and with this ambition before. They are your market leader across everything, subscription, streaming platforms, and legacy cable television. Today, our share of TV viewing is less than 10% in every country, so we have plenty of room to add value for our members and grow our share of viewing by broadening our slate, including with live events. Think comedy, sports, competition shows, and music concerts. Those are the ones they're going to be going after soon. You can see their share of overall TV viewership in the US is about 8% at best. So they still have a lot of market share to go and capture from your legacy TV broadcasting. So very good. Just goes to show you that the company's upside is still tremendous. Now, cash flow and capital structure. Listen to this. Net cash generated by operating activities in Q1 was $2.2 billion, and free cash flow totaled $2.1 billion, both flat with Q1 of 2023. Still a record number, guys. It is on par with Q1 of 2023, but this is the record number still. During the quarter, we paid down $400 million of senior notes, aka long-term debt, with cash on hand, and we repurchased 3.6 million shares for $2 billion. We finished the quarter with gross debt of $14 billion and cash equivalents of $7 billion. Very, very healthy balance sheet, guys. We're still forecasting full year 2024 free cash flow of approximately $6 billion. That would be their best year of free cash flow ever. So very, very good that the company is operating at higher profit margins now, generating free cash flow. It's going to allow them to pay down more of their debt and potentially start buying back more shares. Here's Netflix's total shares outstanding pretty much since the company went public. And you can see, although it's been flat pretty much since 2020, and they have been repurchasing shares, the amount of share repurchases have not really moved the needle much. But what I anticipate to see as the company continues improving free cash flow and net margins, we could be expecting a net drop in shares outstanding over the next 2-3 years. And that's going to be very, very good to boost the company's share price as a whole. Now, let's get right into some of our numbers here, guys. We're just going to do a couple of these, not going to spend too much time on them. So let's jump right into the company's financial statements. As you can see right down here, let me move myself over. Take a look at your revenue number, right? 9.3 billion. That was a 15% increase over the same period in time of March 31st, 2023. Now, that and in line with keeping their expenses standard, right? Let's compare it with the Q1 of 2023. So marketing expenses, yes, they did go up, but not up substantially, right? Still, it was an increase though. They're looking to obviously push their platform in front of more people. So that's a normal expense for Netflix as a whole. Technology and development, not up too much since the March quarter of last year. And general and administrative expenses, relatively flat pretty much on a year-over-year period. So more revenue, largely the same amount of expenses, gives them higher bottom line net margins. Look at this improvement in net income, 25% net margins, guys. This is one of Netflix's best quarters in net margins as a whole. You can see it down here on the right-hand side of the TradingView screen right here. It's not yet posted on screen, but this company in the prior year, their best quarterly margins were about 19.6%, and still last year was record years. You can see on a yearly basis, only about 17, 14, 16% in the last 3 years. Well, now this quarter, they've put up net margins of 25%. So if they can maintain that in the mid to a low 20% range, guys, it's really going to bring the company a lot of extra free cash flow. And we can see that down here as well. We're not going to go over the balance sheet. We already did that. 7 billion in debt, 7 billion in cash, roughly 14 billion in total debt. So very, very solid balance sheet. Not too much debt in my opinion. Stock-based compensation is almost inexistent. Only $76 million here in the entire quarter, which is very, very good. The company brought in $9.3 billion in revenue, right? I might be slightly off. Yeah, $9.3 billion in revenue, and you only had $76 million in share compensation, under 1%. That is fantastic. That is exactly what you want to see. And they did repurchase, obviously, significantly more than they issued to executives and management. So they repurchased about $2 billion worth. We can see that right here. In terms of free cash flow, do I have the free cash flow number? Yeah, net free cash flow right down here. You can see, guys, right in line with the March 31st, 2023 quarter, but they did beat it. So it is, as I said, a record quarter of free cash flow for the company. So the company, all good things for them here, guys. Revenue growth in terms of your fundamentals, right? Revenue growth through 2027, 10% per year, very healthy. EPS growth, here's where it's at through 2027, 24.5% per year. That is fantastic. Take a look at these growth curves. EPS is about to absolutely explode, and revenue is also doing fairly good, obviously expanding still, but the highlight really here is the EPS growth, guys. That is going to be substantial, and that's once again as a byproduct of them improving margins as a whole. So looking very good. You can see the free cash flow numbers down here. 2023 was a record year for them. Right, $6.93 billion. I'm expecting them to at least generate between $6 and $7 billion this year as well. So it should be another record year of free cash flow for the company. Looking very good in terms of the future outlook, right? So the next question is the company a buy right now? Well, you guys know that my desired location to be picking up Netflix shares is pretty much $520 down to about $500. That is the ultimate sweet spot. But how is it right now at the current after-hours share price, which is currently sitting at about $580? Well, we did some valuation here, guys, and you can see it's really not that bad. At $580, it gives them a 2024 forward PE of about 33.6. Not all that bad. Their PEG ratio, however, is really the highlight of these numbers. Their forward PEG at 580, considering the EPS growth of 24.5%, is only 1.37. Anything between 1 and 2 is pretty decent. Anything below 1 is fantastic, and over 2 is expensive. For a company like Netflix at its current stage in its growth period, for it to only be trading at a 1.37 PEG is extremely good value. If we were to come down here, guys, into the lower 500s, this PEG ratio is going to drop to about 1.25, 1.2, and that is a screaming buy opportunity for a company that has much growth ahead of it. The technicals are also looking very good. So in the event Netflix continues pulling back because of overall market weakness and comes back down into the lower 500 range, I will be picking up some shares of this company for the long term. Now, we're going to do more technical analysis on Netflix when we do that stock in the big tech portion of the video. That's pretty much it for their earnings, so hopefully that was helpful. Now, let's dive into company number 2. Company number 2 is going to be another big one, guys. TSM. So yesterday we got ASML Earnings, one of the largest players in the game who manufacture the machines that TSM uses to manufacture their semiconductor chips. Now, ASML said that they forecasted a little bit of a slowdown in the first half of 2024, and all eyes were on TSMC to figure out if they were going to reiterate that first half of 2024 weakness for the entire industry as a whole. And they kind of did here, guys. So the stock was down about 5% on the day today. However, their earnings specifically were absolutely fantastic. No red flags at all. Take a look at these beats. Beat on EPS by about 3%, and they did come in relatively in line with revenue. Their highlights, though, record amounts of cash versus the amount of debt that they have. Very high cash balance for TSMC. And TSMC really doesn't use its cash. It only uses its cash to pay back dividends. It's just stockpiling cash right now. So we could potentially anticipate maybe the company's going to be using that for some mergers and acquisitions of potential competition now that it's built up a cash stockpile of roughly $60 billion. It does have a considerable amount of debt, though, so it can do a lot of things with that cash. It can choose to pay down the debt. It can choose to acquire potential competitors and even just bolster its status as the top tier semiconductor manufacturer even more. Or it may be able to use some of that cash for share repurchases. Keep an eye on TSMC's shares outstanding. They have not changed in the past 15 years. The company really hasn't done much buybacks at all. This is just an anomaly on the chart. Don't mind that. But really, they never have used any of that cash to buy back shares. So just a few elements of food for thought. Now, 38% net margins. For a company that produces goods, guys, those are fantastic margins, some of the best margins for a good producer in the entire game. And they did reiterate that the demand for AI chips was relatively high. So why did the stock drop about 5% off of such beautiful earnings? Well, let's go and have a look. So TSMC beats first quarter revenue and profit expectations on strong AI chip demand. Now, a few of the highlights. TSMC reported net revenue rose 16.5% from a year ago. Fantastic, guys. While net income increased 9% almost from a year ago. Also fantastic. For the second quarter of 2024, we expect our business to be supported by strong demand for industry-leading 3nm and 5nm technologies, partially offset by a continued smartphone seasonality. This is a fancy way of saying our AI chips, the ones that companies like NVIDIA are using for data center applications, and these chips that Microsoft and other companies are using for large language models such as ChatGPT. So your AI chip segment is doing fantastic. What is lagging behind? Everything else. Consumer electronics and automobiles, 2 items that are affected by high interest rates, and now people have less disposable income, so they're less able to upgrade smartphones, less able to change cars and stuff like that. So those industries on a slight little decline, and that's a portion of TSMC's business that's currently in a little bit of a rut. Now, here's what the CEO had to say. In terms of 2024, he expects it to be a healthy growth year, supported by our technology leadership and broader customer base. Very good. So not reiterating what ASML said yesterday, they still are apparently overwhelmed with demand. Now, almost all the AI innovators are working with TSMC to address an insatiable AI-related demand for energy-efficient computing power, adding that the firm estimates revenue contribution from server AI processors to more than double this year. So very, very good line of business for them, obviously. TSMC accounted for 61% of global foundry revenue in the fourth quarter, according to Counterpoint Research data. Samsung Foundry came in second with 14% of the market. So you can see clear market leader. So we have to listen what they say about the overall direction of the semiconductor business. TSMC's net profit margin continues to be one of the highest in the company's history at 40% against an industry average of 14%. They just blow out the competition, guys, demonstrating TSMC's strong competitive position. Now, lastly, the US also recently granted TSMC's Arizona subsidiary preliminary approval for government funding worth up to $6.6 billion to build the world's most advanced semiconductors. So what this means, guys, is TSMC is finally going to build a factory in the United States, and they are finally getting approved for that grant money to build the factory. It's going to alleviate a lot of the pressure that they have operating only out of Taiwan, obviously because of the continued geopolitical tensions between China and Taiwan, which has led a lot of investors to kind of shy away from the company. Most notably, Warren Buffett last year opened a very large position in the company, only to close it roughly 2 to 3 months later when tensions started rising between China and Taiwan. So this is going to be a very welcome feature for the company, being able to produce their semiconductors in the United States. So let's move on to one more article here discussing why were the shares dropping specifically, right? So the problem, while TSMC was upbeat about the demands for its chips to power AI technology, which it expects to represent more than 10% of revenue this year, management offered a downbeat assessment of the semiconductor industry as a whole. So they actually did say the same thing as ASML, right? So they didn't say the same thing in terms of their AI chip production, but their AI chip production is only 10% of the revenue of their business. The rest of the semiconductor industry is indeed slowing down, which is exactly what ASML said yesterday. On a call with analysts, the company cut its forecast for overall market growth this year, excluding memory chips, to 10%. Down from the more than 10% previously. So more than 10% can mean 11, 12, 13%, right? Usually it's just a couple percentage points above 10. Now the company has cut back guidance to 10%. Not that big of a slowdown, is it? But still, it is a slowdown, and the stock was down 5%. Despite the fact that the stock itself is performing beautifully, well, the market was just not pleased with these results. Management said the main reason for the reduced industry outlook was the lowered expectation for automotive semis. Previously, management expected automotive to grow, and now it expects the segment will decline in 2024. Shout outs to all the automakers, guys. Very cyclical industry. Shout out to Tesla as well. As I've said before, guys, it is not a Tesla problem. It is an overall auto industry problem. And TSMC says the exact same thing. Now let's take a look at some of their financial highlights, guys. And it's very tough to do a lot of financial analysis on this because when we go back to prior years as a whole, I don't have them up here right now, but TSMC obviously reports in a different currency. They only really provide the last couple of quarters of comparables in these tables right here in US dollars. So this is going to be what we're going to be looking at. Even you can see here, right? The net revenue here is expressed in US dollars, but a lot of these numbers as well and further tables down below are in Taiwan's native currency. So we won't be going over those. We will be focusing on the percentages because those are things that obviously don't change depending on the currency, right? So take a look at your gross margin. Gross margin for your first quarter 2024 was in line with previous quarters, right? So 53.1%. That is really in line with some of the previous quarters that they've had. So kind of a no change there. And the guidance for the next quarter is going to be relatively the same. Operating margin coming in at 42%. That is also very healthy, in line with prior expectations too. And your net profit margins came in at 38%, which was really in line roughly with the last couple of quarters as a whole. So really no change there in terms of that. Now, first quarter revenue by platform. Here is the growth rate of the different segments. You can see here that their data center applications are doing really well. Think of the AI chips. But everything else, take a look at this, guys. Smartphones, considerably down. Automotive, flat. And the others, quote unquote, is also down. So you can see that all is not as well as it appears to be for the semiconductor industry. First half of 2024 will most likely be an industry-wide slowdown. So that is exactly what I wanted to show you for the company. Other than that, for the company, guys, in terms of the year is going to be fantastic for TSMC. Take a look at this EPS expansion over the next 4 years. Absolutely incredible. Take a look at the revenue expansion over the next 3 years. Also absolutely incredible, guys. 15% revenue expansion per year, 16% EPS expansion per year. Such a fantastic company. Take a look at these net margins over the last couple of quarters. You can see 38, 37, 40%. Fantastic. And in terms of their free cash flow, guys, they're just continuously building free cash flow. You can see this cash pile, the dark line in blue on the right, continues to grow and grow and grow. Record quarter of free cash flow for the company as well. This year should be a tremendous year for them. Cash and cash equivalents right now sitting about $48 billion. As we were saying in the introduction to this company, they can use this for a number of things, either pay down some of this debt or potentially use the money for mergers and acquisitions of their competition, rendering them an even larger at this point, I would argue that they're kind of a monopoly, right? They have 60+% of the market share, and the closest competitor is Samsung with 14%. Intel is sub 10%, just to give you guys an idea, right? So let's take a look at some of the valuations here, guys. So in terms of your 2024 PE at $130, which is roughly the current share price right now, gives them a forward PE of 21. Relatively cheap, guys. Now let's take an expression of their PE versus their growth rate. It gives us a PEG ratio of 1.33. That is absolutely fantastic for the company. Company is relatively cheap right now, if you ask me. So if the market continues displaying relative weakness in semiconductors in light of this and overall market weakness as a whole, we might be benefiting from a few discounts, guys. And if we do pull back into this area, let me show you that best here as expressed on the monthly chart. So it's a gorgeous monthly uptrend right now. Obviously, we're running into a little bit of sector and overall market weakness. But if we pull down into here, guys, talking about the 120 down to about 110, this whole region right here, that is going to be where I'm personally looking to buy some TSMC shares. The valuation is relatively cheap and will get even better down there. But not only that, the technicals are also looking very good. Just a solid monthly uptrend, higher lows for further trend continuation when the company resumes in a more favorable environment at the second half of 2024. So that's pretty much everything for our two company earnings, guys. Hopefully you guys enjoyed that. Now let's dive right into our technical analysis of our indexes, and we can see, guys, nothing much has changed. So once again, I'll be going over these relatively quickly now that we understand why these markets are dropping. Escalated geopolitical tensions, Israel and Iran, and continued fears about the resurgence of inflation, which is pushing back the rate cut schedule at the Federal Reserve. So continued market weakness at this point here, guys. Continued daily downtrend, right? No daily bounce in sight. We were maybe looking at a potential hourly trend change this morning, but the bears completely engulfed. So if you want to see this bounce occur, guys, we have now almost all but filled this NVIDIA prior earnings gap. We do have support down here on the SPY at about 493, but we just cracked a critical level, the 500 level on the SPY, which is a psychological level. So your remaining support levels, guys, currently remain about 494, 495 right down here. In terms of oversold, we are not yet in daily oversold conditions. So just keep an eye, guys. We are waiting for that one-time flush. Your futures right now, I don't know what happened on futures, but the market is extremely red overnight right now. NASDAQ futures down 0.76%. S&P futures down 0.7%. I didn't see the headlines while I've been recording this video. I started the video, they were down about 0.2. So something must have happened, maybe some geopolitical concerns or something like that, right? So we are going to eventually get, in my opinion, the gap down flush, which is going to render a lot of these short-term timeframes oversold. Hourly oversold, 4 hour is already oversold, right? So we're waiting for that final flush, and then off that final flush, we need to watch when are the bulls going to get the hourly trend change. When you get your hourly trend change, that is when your daily chart is going to bounce, and then we measure the size of this bounce. So far, no bounce is underway. We'll tackle that when we get to it, but now we have a lot of overhead resistance, guys. All of our moving averages are going to be overhead resistance, and our big area of previous support will now also be acting as resistance. So you could just be expecting lower high, and then it'll be up to the bulls to save these lower lows if they can. If not, the bears are just going to steamroll them to the downside. If for every which reason, guys, the daily bounce is very shallow, something like this, before they lose the hourly trend again, that is most likely going to result in a daily downtrend continuation, and we'll just continue this weekly sell-off, right? If we do get a daily uptrend from here, well, on the weekly, we're just maybe expecting lower high and then potential lower low continuation, something similar to potentially exactly what we got back here, guys. Until the data changes and until the Fed can be more bullish on these markets and more bullish toward interest rates cuts, right? The markets really have no reason to rally right now. We've rallied significantly off of the back of positive macro data. But you can see as soon as the macro data started changing, which what we recently got, right? Our last inflation report that we got, we can see a net decline right now. And that was pretty much your second week in April. Just last week, we got CPI. And you can see since then, guys, everybody's getting a little bit of cold feet. So moving on to the QQQs. QQQs also currently displaying a continued daily downtrend at this point. So as soon as we get our daily bounce, guys, on the hourly QQQs, we are trending towards the lows, but nowhere near deeply oversold. 4 hours as well. 4 hour, we're beginning to get oversold, but you guys know the QQQs. On the QQQs, guys, sometimes we can hit deep oversold levels as a whole. So just keep that in mind, right? And on the daily as well, the daily is not yet approaching daily oversold levels. We're approaching the level that we first bounced at last sell-off on this first leg of sell-off, where we got our initial bounce and then continued to roll over. So as I said, guys, the bounce is most likely coming soon, but will the bounce result in a very high bounce and daily trend change? Or will we just be looking for a lower high, potentially using this prior support level, which is now resistance, talking about 433, and the moving averages, maybe use them as resistance, and then we will be revisiting these lows, right? We're coming up to our last area of support right now, which is about 420, 421. If we lose that, guys, well, we're coming down into this area right here. So all in all, continued weekly downtrend on the QQQs. Unfortunately, we'll keep watching this one day at a time. And when the daily bounce happens, we're going to be looking for the size of the bounce. Now moving on to XLF financials. So XLF financials here up 0.35% on the day. The really only green point in the day right now. You can see here though, very solid daily downtrend right now. What did the bulls try to do today? Well, we're desperately trying to regain that hourly trend change, right? So I need to see the bulls continue this hourly trend change into tomorrow to give this daily bounce some legs. As you can see right now, the daily bounce is weak, and this is the perfect example, guys. If we were to roll over tomorrow, this is what I'm talking about when I say a weak bounce. The bulls literally only got up to 25%. The bounce was only 25% of this entire downwards move. That's just not enough. We're dealing with overhead resistance of all the moving averages, the 12, the 26, and the 50-day at this point, and overhead resistance as well. We are dealing with our previous all-time highs, which is this red box right here. So definitely not looking the best for financials. If we continue to roll over here, guys, the next area of support is going to be roughly around your $38.50 up to about $39. That is maybe where you're expecting the bulls to put up a bit more of a fight. And maybe then we can get a little bit of a bottom out on this first weekly leg down. But then the expectation, if the markets don't improve in terms of overall sentiment, could just be lower high and then maybe lower low, similar exactly to what we got back here. So we'll take this one day at a time here, guys, but definitely, right, the bears right now are in full short-term control of your daily downtrend and in full short-term control of this weekly down swing right now. Not yet a weekly downtrend that would be lower high into lower low. So we'll keep a very close eye on financials as a whole. Now moving on to XLV Healthcare. So XLV Healthcare was relatively flat on the day. And you can see, guys, the bulls are trying to put on a fight over here, but they're still looking very weak. So daily downtrend simply continues at this point. If we eventually do get that daily bounce, you can see we're trying our best, right? You can even say, well, it's a bit of a descending wedge. Usually descending wedges like this can be a potential pattern that does break bullish at a certain point in time, right? But the bulls are definitely not showing signs of any life, right? What we need to see from them is a significant change in the hourly trend. Once we get our hourly trend change, we will measure the size of the bounce in relation to our most recent leg of selling. This guy up here, 140.58. If we can get a substantial move up into here, we could get some short-term relief, set a new daily uptrend. Then we would just be maybe looking for lower high on the weekly. And then it's up to the bulls to prove to us, can we protect these lower lows and get back into a weekly uptrend? Or do we just perpetuate these lower lows right here, perpetuating this weekly downtrend as well, which will just bring us further and further into monthly consolidation territory. My line in the sand for healthcare right now is about 134. So we're still a ways away from that, but that would be the point where it's going to be very tough for the bulls if we lose that to just V-shape this as if nothing happened. Maybe we just end up in a little bit of monthly tightening range right here before potentially exploding further on later on in the year. So very unfortunate sell down by healthcare, but we are in a big area of support right now. Previous all-time highs, that's what's kind of holding us up at these levels right now. Moving on to semiconductors at this point. So semiconductors yesterday was a bit of a toss-up, whether or not we lost the 213 level. Only one day of trading below it. We could have got the rebound today with some healthy earnings, but now we have clearly lost the level, and that has done a couple major things, guys. Well, number one, we are currently in this big daily downtrend right now, right? So as soon as we get a daily bounce, could be expecting just a lower high into lower low continuation now that the bears have gained control of this short-term time frame. The moving averages are above us now, and our 50 EMA as well, this red line right here, which we have not crossed since last October. We are now back below that. SMH was one of our last remaining lead bulls in the market, the only bull that had not lost the weekly trend. Now they have lost the weekly trend. We are now in a weekly downtrend. You guys know what weekly downtrend means? It means we are officially in monthly consolidation. So could we see monthly consolidation continue through the month of April and potentially through the early stages of May? Absolutely. We got a similar sell down over here back last October. At this point, just looking for the monthly higher low for further trend continuation. So we'll keep watching this chart one day at a time. The next area we're going to be watching for is the gap fill from the NVIDIA earnings, guys. 197, but definitely short-term bear control on the daily, and now the weekly. We'll see how this candle closes tomorrow, but not looking the best. One of our lead bulls has now also joined Team Bear. All of your major indexes now at this point, guys, only the S&P. S&P hasn't set the weekly downtrend yet. That will be lower high and lower low, but they did lose the weekly uptrend, right? We lost our higher lows right here. Gorgeous weekly uptrend, loss of the lows. They still have not rolled over into full weekly downtrend. But what has? Well, QQQ has. XLF, not yet. That would need the same thing as the SPY pretty much, a lower high and lower low, but this engulfing move is definitely notable to us. XLV has joined Team Bear a while ago, weekly downtrend. Now SMH also joins Team Bear in the weekly downtrend, so just not looking very strong in the markets right now. That's why I say here, guys, your last bulls have finally joined Team Bear, which means that we probably still have a little bit of ways to go in this sell-off. Are we expecting the waterfall continued drop like this? No, but could it be choppy, just downside selling until we get some more clarity from the Federal Reserve here in the month of May, and even, from earnings as well? Absolutely. So moving on to the IWM Russell right now. So IWM, really not looking the best here, guys. Flat on the day, yes, but the selling pressure is very, very high right now. So daily downtrend simply continues at this point. As soon as we get a little bit of a relief bounce, we'll see how high does the bounce take us in relation to our most recent lower high, 202.75. So keep that in mind. If the bounce is weak, may just be rolling over, especially couple that with the fact that we're below our short-term moving averages. And we're now below this big previous area of resistance, which was roughly the 195 to 200 area, the 1.5 year area of resistance. We're now back below that. So it stands to argue, especially if the rest of the markets are weak, guys, IWM may just do the lower high into lower low and just may simply continue, guys, this weekly downtrend right now. Even if we were to set a little bit of a daily uptrend amidst all of this, right? In my opinion, even a daily uptrend would just be for a weekly lower high, for a potential weekly lower low at that point, weekly downtrend, just for further monthly consolidation at this point, right? So the Russell, in my opinion, where will the pain stop? Well, if this is a big if, right? If we have a decent inflation report in the month of May, and that helps alleviate the pressure from interest rates a little bit, well, you may be able to see a bottom on your Russell right here around the mid 180 region. But, then this is a big but. If inflation data doesn't improve and the Fed remains on its hawkish stance that it has to be rates higher for longer, and they further reduce the expectation for any rate cuts in 2024, well, the Russell is just not going to be able to get its breakout out of this range. It most likely will just become trapped once again. So keep a close eye on that. Still not a favorable trade for me. Still not one that I'm looking to enter just yet. And now lastly, the Dow Jones. So the Dow Jones as well, guys, is currently in Team Bear right now. You can see that clear as day right now. It's a stark contrast, the past 4 or 5 months of rally, and now the fact that we've lost all of your major moving averages across most of your indexes, right? The Dow Jones as well not being spared, even though it's more of a defensive index. So daily downtrend clear as day right now. The bulls looking very weak. They're trying to protect these lows, but still no evidence of that hourly uptrend. As soon as we can get this hourly uptrend, guys, your daily bounce will be underway. And then we measure the size of the bounce in relation to 39,000. Get me as close as possible, and the bulls may have a chance at setting the higher low and reversing this into a daily uptrend. However, if markets continue to be weak, well, then we could just be expecting, guys, a little bit of a bounce, encountering our moving averages as resistance. If we get as high even as 38,500, are just expecting the lower high, and then remains to be seen. Can the bulls defend the lows, or are we just going to roll over? We'll keep this one day at a time, as we always do on the channel, guys. On the weekly, big weekly engulfing move, right? So weekly consolidation simply continues at this point. And if weekly consolidation just continues here through the rest of the month of May as well, that's going to be a weekly downtrend. And we're just looking once again for monthly higher lows, anything above 32,400, just a healthy monthly higher low. So tons of space still in these markets, guys. Previous all-time highs are going to be the stopping point that the bulls are going to put up a lot of defense at, in my opinion. So the Dow Jones already selling down quite crucially, as of now, as I've said, guys, we're still looking for that one day of extreme, maybe gap down open flush. It could be tomorrow, the way that futures are looking right now. I mean, futures already down here, almost 1% on the NASDAQ and 0.82 on the S&P. So something definitely happened, guys. Keep an eye out for those Israel-Hamas headlines, Israel-Iran headlines, right? Now, let's move into our big tech names. So big tech as a whole, guys, Apple not having the best day at all, 0.57% to the downside. So the Apple slide just continues. They've now engulfed the entire move that we had last week, engulfed it, and set lower lows. So no chance of a daily uptrend currently. The bears have now engulfed this. So any move higher may just be expecting lower high into potentially lower low. Now, Apple only has earnings the 2nd of May, so there's a lot of time before that. And if big tech earnings are underwhelming next week, Apple may just get dragged down in the mix. Apple only has one support level left in this entire region, and that's pretty much your 166. We're getting dangerously close to that because if we lose these levels, the next support level isn't for a considerable amount of space still. You're talking about the 155, 150. That is the next line of defense for Apple, especially the 150, which would coincide with the 200 weekly moving average, which Apple really has not lost here over the course of the last arguably 10, 15 years at this point, right? So this is going to be the all-time buying opportunity for Apple, in my humble opinion. Even if market conditions are unfavorable, Apple is still viewed as a very defensive company and has a lot of positive aspects to it. So that is pretty much what we're looking for here on Apple. Any bounce here, going to obviously watch for the size of the bounce, but currently, with the way the markets are positioned right now, I would not be surprised for the lower high into lower low, which will just perpetuate this weekly downtrend that Apple stock has unfortunately been stuck in here, guys, for pretty much all year at this point. Apple has just been in an extended weekly downtrend, right? Very unfortunate for Apple, but I am looking forward to load up on some leap call options. If we see these levels here, guys, I'm going to be probably buying 1.5 2-year leap options and letting them ride. It's a great way to, it's a share replacement strategy, guys. I'm not looking to speculate. I'm just looking to replace. Instead of spending $15,000 on 100 shares of Apple, I'll probably be able to get those contracts for $5,000, $6,000, $7,000. So you have the same exposure, but you're paying pretty much half of the price. Now, moving on to AMD. AMD obviously having somewhat of a flat day here today, up 0.69%, even though a lot of semiconductors were down today. AMD and NVIDIA actually performing somewhat decently, right? But still in the context here, guys, of this daily downtrend right now. So if AMD benefits from a bounce tomorrow, we will look, can they get as high as 164.23? Need to see them get as high as possible to get the chance of either engulfing this move. It's not that big of a move so far to the upside. AMD would only need, about 5%. AMD is a very volatile stock. It can do that in 1-2 days sometimes, right? So we're going to be looking for the engulfing move perhaps, or at least a sizable enough bounce that gives the bulls a chance to set the lower higher low into a daily trend change. And if we do get the daily trend change here, guys, that's just going to be looking for a weekly lower high, right? Weekly complete downtrend right now, maybe just looking for the lower high, and then we'll see, can the bulls protect this to the downside? AMD not with earnings for, at least another 2 weeks. So it's in 2 Tuesdays from now. So in my opinion, guys, right, all eyes are going to be on these earnings. But if big tech reports somewhat underwhelming earnings, AMD could get dragged down on the mix. So in terms of the lower levels that we're expecting right now, guys, the biggest level that stands out to me currently is your 50-week moving average, and that is sitting about $140. 145, 140 is going to be your next big area of support. And the lower end of that, obviously, after that, guys, it gets pretty low pretty quick. So hopefully AMD can do a good job of defending this. But once again, as I said, guys, it's not really an AMD problem. It's an overall market weakness problem right now, especially from the earnings that we got from ASML and TSMC. We might be expecting some weakness from AMD over the first half of this year. So let's see what happens with this company as a whole. We have a bunch of resistances above us right now. This previous support zone, 164 to 168, that's now resistance, and your moving averages are now resistance as well. So the bear is definitely in short-term control of daily and weekly. The one saving grace for the company is that we're still in a gorgeous monthly uptrend, just looking for the monthly higher low, and the monthly 12 EMA right here is at that $140 mark. So let's keep a close eye on AMD. Myself, I would be very interested in playing AMD if we do get a little bit of a dip down here. 140, 130 seems to be max pain for this massive leg down here before we get a little bit of bids happening. Now moving on to Amazon. Give me a quick second. So moving on to Amazon here, guys. Amazon down about 1.14%. And Amazon did something recently, guys, that it lost a key point and now is no longer one of our lead bulls. So what did it lose? Well, it had the daily uptrend, and now we've lost the daily uptrend. Flush of these lows right here. Bears with a very big engulfing move, and now the bulls have to play some defense at the 178. The 178, a big previous area of resistance. It took a long time to get through this area. So now should be able to use it as our first line of defense. 178 also big resistance 2020 and 2021. So they should be able to put out a little bit of a fight at this level. And also keep in mind, with confluence to that, you do have your 175, the 12 EMA working in that region as well. But I've said it a number of times, guys, Amazon will not be able to do it alone in these markets. Amazon with earnings in 2 Tuesdays from now as well. So still a considerable amount of time away. Right now, the bears are set up perfectly for the potential lower high into lower low daily downtrend conversion. And that would just mean that we're in for weekly consolidation. Weekly consolidation, anything above 172 would still be a weekly higher low for further trend continuation. We would not like to see Amazon lose this 172 level leading into earnings. It just opens the door, if they're underwhelming, for a potential flush down here back into the low 160 level. I'm expecting good things from Amazon's earnings, but obviously you just saw it on Netflix, you saw it on TSMC, positive data overall, but if they have one little negative element, Wall Street may just say, you know what? Let's just sell this stock anyways because it is at all-time highs. It's at a tremendous rally this year. Maybe it's just some time for a little bit of correction. And if that were to be the case here, guys, if for some which reason we come into extended consolidation, keep in mind, please, Amazon still with a ton of space on the monthly here, guys. This lower bound of this previous support zone right here, starting about 160 to 150. If over the course of the next couple of weeks, month, we get drawdown on Amazon back into 160, 150, that is as well where I will be going shopping for some potential leap options. So let's just keep that in mind. These dips will be for buying opportunities. And obviously, what do the bulls have to do? Well, the bulls have to put in a nice enough move to recapture this daily uptrend. So we will keep a close eye on these markets. Moving on to Google now. Google up 0.37%. So Google trying to recapture a little bit of levels. However, there are some red flags on Google's chart as well. So beautiful daily uptrend right now. We were looking for the higher low for trend continuation, but 2 days of bounce looking very weak in terms of our candle formation, right? The hourly trend change had been had by the bulls right here. You can see that. And now end of the day, we had an engulfing move. So if we lose that into an hourly downtrend tomorrow, your daily bounce will be finished and it opens the door for the bears to roll this over into lower lows. And you know what that would mean. If we do lose 155, that would be a daily downtrend, which means that we're already into weekly consolidation for Google. Google healthy, however, anything above 132, just going to be looking for a healthy weekly higher low for potential further trend continuation when we get through a lot of these market fears. Once again, Google, I am very interested in buying this company. If we can see the 140 handles again, lower 140s, this is going to be such a juicy buying opportunity, guys. Once again, just looking out for the monthly higher low for further trend continuation. Google valued extremely juicy right now. Very fairly valued company. Their earnings are coming up Thursday, the 25th of April. So we'll see. Price action until that point in time in earnings should be fairly muted. And I say should be unless we really get some other negative geopolitical headlines from Israel and Iran or something like that, right? So all in all, Google's chart not looking too bad right now, but definitely starting to lose some levels. And one of your lead bulls, once again, looking fairly bearish. So a lot of stocks currently pivoting. Even Meta, the next one, let's take a look at Meta right now. So Meta was up at one point in time 3% today, but they sold off most of those gains into the end of the day. Now, Meta was also one of your lead bulls. They've recently lost the daily uptrend. Now, daily downtrend, potentially setting the lower high today, maybe looking for the lower low. So take a look at this hourly engulfing move. If the bears roll this over tomorrow with an hourly downtrend, that means your daily move higher is finished, only one day. They've now set the lower high, and now we look for the potential lower low flush to these last levels of support. 488 down to about 475 is going to be your last line of defense. Meta earnings as early as next Wednesday. So I need to see Meta bulls protect this area before the earnings on Wednesday. It gives them the best chance at continuing this weekly uptrend if ever their earnings are fantastic. However, if we lose this level leading into earnings, guys, Well, you may just end up with something like this, right? Daily downtrend. If we're right here, if we're down below here prior to earnings and earnings are a miss, well, at that point in time, guys, you may just get the extended flush down here in one single day. And at that point, they will be probably looking to fill a last earnings gap, which will come down all the way down to 400. I know it sounds like a heck of a drop, but in these types of markets, I would not be surprised. But, that is not negative, guys. If for any which reason, Meta comes back down to 420, even 400, that is where I'm going to be playing some juicy levels on Meta as a whole. So all in all, not too bad. At that point, we'll just be looking for the monthly higher low for further trend continuation. So any and all significant dips in big tech, I will be looking at aggressively to play in the event we do come down there. Moving on to Microsoft at this point. So Microsoft down almost 2%, 1.84%. And boy, guys, Microsoft is losing ground quite quickly, isn't it? So at this point in time, guys, daily downtrend is set by Microsoft, right? You can see it right here. This is leg number 2 of this most recent sell-off that's been started pretty much last week. So currently still in this daily downtrend right now. Any move higher, most likely simply looking for the lower high into lower low. Our moving averages are now above us. We're now below our top end of range of consolidation. This line right here, 415. Now we have to look to the lows to protect us. Those are going to be roughly at around $400, $398, $400. It's a level that Microsoft held up very well over the course of the month of January and February into even early March, and represents your weekly higher lows. So if Microsoft were to lose these levels, they would effectively be losing, unfortunately at this point, the weekly uptrend. We had a look above and now hunting for the weekly higher lows, running out of space, however, right? In terms of the monthly still looks very healthy, just looking for the monthly higher low, even if we do lose these levels. Microsoft earnings next Thursday. What I need to see Microsoft do is protect these lows for the same reason as Meta, right? If we lose too much of these levels before earnings, at that point, if the company, even if it does report good earnings, may just be in for a lower high into lower low as the rest of the market continues its consolidation, would be a loss of the weekly uptrend, and then we'd be in for some very healthy monthly consolidation. The levels on Microsoft that I'm personally looking to play, guys, is going to be roughly lower 380s. Anything lower than 380, talking 370 down to my ultimate sweet spot, 360, 350. That would be top to bottom a sell-off on Microsoft of about 13 all the way down to about 15%, which is kind of on par of what they did pretty much last fall for the sell-off top to bottom, was about 15% as well. So going to be looking very, very nice if we do get those extended dips into this area. Now, moving on to Netflix. So obviously Netflix just did report earnings today. So their per share price right now is about $580. Let's see if it dropped a little bit more. Nope, that's pretty much the last traded price, $580, right? So 580, we still have one line of defense remaining, which is going to be the 575. Tomorrow, the way the chart's going to open is going to display a daily downtrend currently, right? So daily downtrend, the bears are now fully in control of this daily chart. We are looking at our 575 to act as defense. Not only was it resistance up here, but it was resistance for a very long time in 2020 and 2021. So hopefully we can hold those levels. Now, that is also a very important portion in time too, because those are currently coming very close to our weekly higher lows on this chart, right? If we come down too much, it opens the door for lower high into lower low, which would really be similar to a lot of what your other stocks are doing and indexes, right? If we set up for the lower high into lower low and end up in heavy weekly consolidation, just looking for the monthly higher low on Netflix, as explained when I was going through the earnings, guys. If we can see 520 down to 500, that is where I will be adding to Netflix in terms of that. You can see it was a very big support area back here, and the bulls have created so much space that I do think this is the likely area that we will bounce from if ever we start really losing levels quickly. That will be a sell down of about 20%, which is exactly the type of sell-off we got last October when the company fell 28%, as a matter of fact, top to bottom. The lower end of my range, if we do get to 450, which would be the ultimate crush, that would be the 28% drop, similar to last October. So I'm scouting all that I'm doing on all these big tech names, guys. I don't mean to sound too bearish. I'm establishing levels at which I will be patient enough to wait for. And if they come to me, whichever ones come to my desired levels, those are the ones that I will be buying aggressively over the course of the next month. Now, moving on to NVIDIA, another stock that I would really like to buy the dips on. NVIDIA staying very, very close to our 850 mark, right? Yesterday we were saying we had a break of 850, but the break wasn't convincing enough. Well, now we got a very decent break of 850, but the bulls were able to recapture. So fairly muted day on NVIDIA as a whole. However, we are still in the context of this continuation of the daily downtrend. That means that weekly consolidation is still underway. We have our 12 EMA right here at about 811. That is the first line of defense. However, if the markets continue rolling over and NVIDIA somehow loses the 850 mark off of continued semiconductor weakness, well then guys, they set it up for the lower high using the 850 as resistance and flushing to lower lows. That would just extend our weekly consolidation a bit more, maybe even, since we set a higher high this week, barely, maybe even set us up for a weekly downtrend. Weekly downtrend would mean monthly consolidation, and for monthly consolidation, the level that I'm targeting personally will be 750 down to 700, a very juicy area of support if you ask me. Would be a significant discount on NVIDIA. Top to bottom, that would be anywhere between 23 and 27% from the highs, and fittingly, throughout the sell-off, guys, last fall, top to bottom, we got about 22%. So roughly in line, a little bit more, but that's the size of sell-off we can get on even the strongest stocks, guys, when the overall market pulls back. So keep an eye on those levels for NVIDIA. Not looking the strongest right now. And obviously to the bullish side, what do the bulls need to do to regain control? Well, they need to get as high as possible in relation to 909. If we get that expected move back up to close to 909, it gives the bulls a chance to recapture a couple things. The 850 support, the moving averages as well, and recapture of the daily uptrend. And that would be a relatively bullish sign for NVIDIA. If we can recapture this daily uptrend, it means that your weekly higher lows are set. And then we're going to be looking to attack these highs once again. So we'll keep an eye on this stock one day at a time. One thing's for sure though, if we do come down here over the next month, this is where I'm looking to start a position on the swing trading account for NVIDIA. Now moving on to Tesla. So Tesla today, guys, breaking our last crucial level of support. This is definitely the worst case scenario for the bulls. If I do say so myself, guys, I really, just got to call it as it is, right? We just broke major support right now. The last line of defense was about 152. We have now lost that prior to earnings. So earnings coming up next Tuesday. So what can we potentially be expecting from earnings? Well, I was saying to give ourselves the best chance, now I moved the entire level. To give ourselves the best chance, we needed to put enough space between us and these lows prior to earnings. Unfortunately, that has not happened on Tesla so far. So now the daily bears are in full control of this chart. Any bounce just going to be for a higher low or lower high, and then we will see, can the bulls protect this region or and try to set up for the daily trend change? That would only happen, in my opinion, off of bullish earnings, right? So if we get some bullish earnings, could get a nice little bounce, create some space, get space for a daily trend change. However, if the earnings are negative, as expected they are to be, guys, that is when we may get, who knows, maybe the stock is so crushed that we will actually get, even if the earnings are bad, maybe a lot of it is priced in. But let's say in the event it's not priced in, guys, and Tesla goes for the absolute flush. Where are we targeting? Well, our next area of support, guys, comes to roughly the $130 mark. That's our last line of defense. And the next one, guys, I don't even want to say the number for fear of sounding too bearish, but it's these guys right here, okay? So that's just how the Tesla chart is right now. Continued weekly downtrend. As I've said, guys, it is not a Tesla problem. It is an overall auto industry problem. I don't want to sound too bearish on Tesla. It's just the overall industry is suffering from a slowdown in demand. Tesla obviously has some very positive catalysts coming at the tail end of 2024, right? They have their potential launch of the robo-taxis. They just laid off a bunch of employees to save costs and maintain those margins and free cash flows. And they will potentially be opening a new gigafactory in India, which should provide them some more upside in terms of serving the lower sub-Asian continent, right? So that's going to be very, very good for Tesla as a brand as a whole. It's just in their main markets right now, interest rates are so high that they're getting crushed by demand. So keep a close eye, guys, on this earnings. As I've said before, I will not be playing earnings. If we do get some significant downside after earnings, however, that in my opinion is going to be a potential swing trade here. For a lot of retail investors, they will capitulate. That will be an area of max pain, and that will be a potential area for us to swing trade if we do dip down hard into the potential 130s, right? So just keep an eye on that for Tesla. Now moving on to Palantir. So Palantir also not performing the best today, only down about 0.84%. So, not a total crush day on Palantir, but not the best day. Palantir is still in the context of this daily downtrend this whole time. The most recent legs are these ones right here. So if we do get a little bit of a mounted rally on Palantir, since we are falling into our big area of support right now, I mentioned this all the time on the chart. This whole 2150 down to 19, huge prior support, prior resistance should now be acting as support as well. A few moving averages are in the mix as well. That comes all the way down to 19. So we're coming into the area where bulls are going to be placing some bids. That being said, we need to eventually reverse this daily downtrend. And the only way we can do that is getting a significant enough bounce that we create enough space to set the higher low into higher highs. So far, no indication of that. We need to see a change in the hourly uptrend, a significant hourly trend change, and then need to see how high does the bounce get us. The one thing that's working against us right now, guys, a few things, right? We have overhead moving average resistance, and obviously that 23 level, this lower high right here, is a horizontal resistance as a whole. So Palantir may just be setting up for the lower high, and then we'll be able to see, can the bulls protect these lows, or will we roll over and just continued extended weekly downtrend as well on Palantir and extended monthly consolidation? Monthly consolidation is not a bad thing for this stock. You can see it does it a lot in the past, right? And I do expect the bulls to put up a heck of a fight, $19 at the lower end of this range. So Palantir as a whole, not looking the worst, looking fairly juicy if we're looking to buy dips in this lower 19 level right here. Now, moving on to PayPal lastly. PayPal down about 2%, and the slide on PayPal simply continues at this point, right? So clear daily downtrend on PayPal in motion. The most recent selling leg starting pretty much today. You can see that. This is why I say, guys, when you recapture an hourly trend, how long does the hourly trend last? If you lose it after one day, that's pretty much setting the daily lower highs into lower lows. Daily downtrend simply continues at this point, coming into our first area of support right now, talking about 63 down to about $61. 61 is the lower end of that bound right there. So that's going to be our first line of defense, but it's definitely not looking good, guys. PayPal can't do it on its own, right? It's a byproduct of the overall market selling down right now that we have significant declines in PayPal. As a whole, your weekly as well, guys. The weekly is giving up some of these levels quite quickly, so I'm going to be fairly conservative if I do play PayPal at all. I feel that right now is only a market for your highest conviction trades, and although I like PayPal, I wouldn't put it on the same conviction list as companies like NVIDIA, AMD, Google, Apple, Amazon, right? You need to know what are your highest conviction plays. Not saying it's a bad play, it's just not my highest conviction play. That being said, weekly still in an uptrend, but giving back some ground quickly. Need the bulls to put in a stop down here at the 61 level. If not, guys, if we take back too much of this move, it can set up the bears to set the weekly lower high and then maybe the weekly lower low, and then we'll be re-challenging this lower $57, $58 region for the company. That type of sell-off would only happen, in my opinion, if we go into this multi-week, maybe up to a month, month and a half sell-off in our overall indexes, right? Nothing that the company is doing negatively. Specifically, the company is actually doing all the steps necessary to turn its story around, right? And we heard that as of last quarter. 2024 going to be a transition year for the company, so don't expect to see many leaps and bounds in terms of their financial gains this year, in terms of their improvements in margin, improvements in revenue. For that, we'll probably have to wait until 2025. So PayPal looking for the $61 to play as support. But as I've said, guys, be very, very, very careful if it's not a high conviction play for you. Well, with all that being said, guys, that was pretty much everything that we had on the day. This is a heck of a drop on futures right now. Let's just take a look at why that was. Stocks, futures, news. Let's take a look if we can find it here, guys. Fall amid hawkish Fed speak. Oh, really? Well, let's take a look at that. I'm going to take a look at this, guys, and we'll brief you guys tomorrow, right? I thought it might have been Israel-Iran news, but apparently it's not. Maybe some hawkish inflation speak. We'll see. That's very, very strange. Deals on Thursday. Hawkish comments from Federal Reserve. Further concern for higher for longer. Well, I won't read this on screen, guys. We'll tackle that afterwards, but definitely a heck of a sell-off on futures right now. So tomorrow may just be that final flush before getting some bounces. So let's stay alert. Still a good time to be building some cash reserves as well, guys. Great time. If you haven't done it so far as well, write some covered calls. You might want to trim a few positions as well because these dips are potentially here to last. Now we've lost a lot of our weekly timeframes. That's just the way the cookie crumbles, guys. I wish I could be more bullish on the short term, but until we get more positive economic data and more positive geopolitical events like Israel and Iran brokering some peace treaties, more help in the Gaza region as well, well, just expect those catalysts to further weaken the market as those news headlines come out. So hopefully this video was helpful in guiding you through this, somewhat somewhat treacherous landscape right now that we're dealing with right now, right? So hopefully it was educational, guys. I really try my best, and I'm really sorry if I sound bearish. I'm just trying to give you guys what I see on the charts. I'm still overall very bullish on these markets, and I'm still piling cash to be buying these dips at opportune moments. I just don't think that we're through the final stages of this sell-off right now. If anything, we may only be 30-40% of the way through. As I said, guys, not expecting this. It may just be choppy. So we have to be very patient and selective on the stocks that we choose to buy now. And just don't full send the portfolio all the cash right now. I'm telling you, most likely, in my opinion, these dips will continue. So if all this was helpful, guys, consider dropping a like on the video. If it helped you, consider subscribing to the channel as well if you're new. We do these daily market recaps every single day, Monday to Friday. And consider also leaving a comment down below if you have any questions whatsoever. If you want me to look at a specific stock, if you want me to look at some specific macro headlines and their impact, an options trade perhaps, anything you want, guys, leave it down below and I'll be happy to answer. So take care. I'll see you guys tomorrow after the close for our weekly market recap. Take care and peace.